Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we are diving into Marky Corp's latest 10K report. It might sound like a party, but trust me, after seeing their numbers, you'll need a party just to forget about it. We will be diving into a company that promises social media disaster than marketing success. Scrolling and we'll report present to section 13 or 15D. Stop CT as Cities Exchange Act of 1933 scroll. This is their annual report for the year that ended in January, a Form 10K. It's basically a yearly checkup that all public companies have to give to the Securities and Exchange Commission, the government agency that watches over them, and by extension to you and me. It has information about how the company did, what risks it faces, and some other things too. It's a lot of information, so let's go through it together to find what is really important. Scroll Marky Corp. That's who company. Scroll the company. Scroll Marky Corp. That's who we are talking about today. Says it provides social media marketing information. Basically, they say that they are a platform that offers subscribers access to valuable social media marketing information. Their platform is an information site where they say they post global marketing and advertising news on social networks. Think of it like a news aggregator, a place to gather content. They have a website and even launched a mobile application called Marky News, promising exclusive access to social media marketing resources and updates. They make money by selling subscriptions for access to RSS feeds. Now let's see if all of this translates to profits. Quote, before we dive into the numbers, let's talk about the competition. Marky Corp operates in a very competitive landscape, a place of niche software and website development. They say there are low barriers to entry in this industry, which means new companies can pop up easily. They admit that many of their competitors have some advantages. Some of these advantages are established reputation, a large customer base, extensive resources, strong partnerships, customization, brand recognition, the list goes on. Now, how does all this competition impact Marky Corp? Let's look at the financials. I'm going to scroll down to their balance sheet. This is a snapshot of what the company owns assets and what it owes liabilities at the end of January. Looking at the assets, they had about $16,000 in current assets. That includes cash and things they can quickly turn into cash as of January. Then they have about $108,000 in fixed assets like equipment and software, summing to about $25,000 in assets. On the liability side, things look a bit more concerning. The company had about $131,000 in total liabilities. Most of it is due to a related party loan. We will talk about that later. When your liabilities are larger than your assets, that's generally a sign of trouble. Moving down, we have something called stockholders' equity. This is about negative $6,700 as of January. To put it simply, they owe more than they own, and this company is technically bankrupt when we look at it on paper. These numbers aren't exactly painting a pretty picture of financial stability. I'm scrolling down to their statement of operations or their profit and loss statement, basically the company's income report. Here's where it gets more interesting. They had about $37,000 in sales during the year. That's not a lot of money considering the expenses they had. When you look at operating expenses, they come up to about $71,000. A big part of that is professional fees, which is about $40,000. They also spent a lot of money on depreciation. So when you subtract the $71,000 in expenses from the $37,000 in revenue, the company has a net loss of about $33,000. This net loss is much higher than their previous year of only about $1,500. Let's talk about what is happening here. I'm now scrolling down to the statement of changes in stockholders' deficit. This statement shows how the ownership value of the company has changed over time. Looking here, the company has been selling shares of common stock at 3 cents a share. By the end of January, the company's accumulated deficit was about $35,000, meaning that the company has accumulated losses of this amount since its creation. I am scrolling down to their statement of cash flows, record of the money coming in and going out of the company. From their operations, their normal day-to-day business, the company used almost $8,000. They spent about $23,000 on investing activities like purchasing intangible assets. They did receive some money from financing activities, which includes selling stock and a related party loan. By the end of January, they have almost no cash left, about zero. This is not a great sign because they were left with about $23,000 the previous year. I'm scrolling down to the notes to the financial statements. Let's focus on note 2, which addresses the going concern. This note admits that the company had limited working capital. It means they don't have enough money to pay their bills. Also, they say they haven't established a stable source of revenue, and this raises substantial doubt about whether the company can continue. They also say that they need additional investment to keep the company running. Basically, they are depending on getting more money from investors, because the company is not making enough itself. That's never a good sign. Scroll summary of significant accounting policies scroll. Now let's move on to their accounting policies, which are in note 3. I will scroll to it. I'm scrolling down to the section on research and development. They account for research and development costs by charging them to expenses as they are made, which is the right way to do it. Scroll recent accounting quad pronouncements. Scrolling down to the section on recent accounting pronouncements. They say they have reviewed all the new accounting standards and don't believe any of them will have a significant impact on their financial statements. Scrolling down to the stockholders' equity to highlight some key details. As of the end of January, they had about 4.3 million shares of common stock issued and outstanding. Scrolling to related party transactions, this is always something to keep an eye on. The company's director loaned the company about $116,000. This means that the company is heavily dependent on its director for funding, which can create conflicts of interest. It also suggests that the company may not be able to obtain funding from other sources. I'm now scrolling to a very important note, which is note 6 on subsequent events. These are events that happened after the end of the fiscal year in January, but before the financial statements were issued. There was a change in control of Marky Corp. The former chief executive officer sold all of his shares for about $500,000. The old CEO also resigned from his position, as did another director of the company. A new CEO was appointed along with a new director. This major shake-up in leadership and ownership signals a significant shift in the company's direction. Whether this change will be positive or negative remains to be seen, but it's definitely something to watch closely. I'm scrolling down to note 9A on controls and procedures, what they do internally to control financial reporting. They say they do not have an adequate internal control structure or appropriate segregation of duties. To put it simply, this means they admit their financial reporting might not be accurate. They say there has been no change in their internal control over financial reporting. This is a big problem. So what do we learn from all of this? Marky Corp at the time of this filing was in a very difficult financial situation. The company has a lot of debt and has a very small amount of income. The company is burning through its cash. The company acknowledges serious deficiencies in their accounting. However, there was a complete change in control with a new CEO and board member who bought out the old CEO. It remains to be seen what they do. Thanks for watching. If you enjoyed this video, please leave a like, comment, and subscribe for more corporate decoder.